Hello there. Welcome back to Accounting Space. In this video, we want to look at a past exam paper whereby we are going to look at typical examination question. This is an essay question that we want to look at. Let's subscribe and share to our channel. Let's share the link to our colleagues who are doing Zimsec O-Level Commerce. As for this video, we want to look at a question from a past question paper. So we're going to start by understanding what we mean by bill discounting, and then we also look at bills of exchange. Bill discounting it involves when a business has got unpaid bills, and then a business approaches a bank or a financial institution so that they are urgently paid on their invoices, and obviously they are going to get a lesser amount than that is there on the invoice. And then when the amount when the invoice is now due or the bill is now due, the payer is not supposed to pay the business but will pay the bank. In other words, the bank is now collecting the money on behalf of the business. This is what we have in the process of bill discounting. Basically, the bank now obviously will earn a commission in the process. So that's what we have, because we are saying the business is giving the invoice or the bill to the bank, and then the bank pays the business earlier than when the bill is due. Basically, that's what we have in terms of bill discounting. Also, we have got another term that is there, that is bills of exchange. So you see now, when it comes to a bill of exchange now, it comes as a written order binding one party to pay a fixed sum of money to another party on demand or at some point in time in the future. We are going to see that in the process of a bill of exchange as a document, we are saying there are three parties that will be involved. We have got we have got the drawer, we've got the payee, and also we've got the drawee. So we've got three parties that are involved when a bills of exchange is written. This is the explanation that we have in terms of these two, that is a bill discounting and then a bills of exchange. You are going to see that according to the explanation, bills of exchange comes as a document that facilitates the process of bill discounting. This is so we can now go to our question and try to see the question that we have according to this video. The first question that we have is saying, what is bill discounting? Obviously, this question is asking us for the definition of bill discounting or a description of what exactly do we mean by bill discounting. And we see that our question has got 5 marks. So we've got points that we have there that are explaining the meaning of bill discounting, which it says, the first point is saying it involves a bill of exchange. So like what we are saying, that a bill of exchange becomes a document that's facilitating the process of bill discounting. So first point reads, it involves a bill of exchange which can be cashed or sold at a bank for immediate payment. Then you go to the second point. It enables the bill to be paid before the stipulated payment or due date, less the amount of the bank discount provided. The bank is satisfied with the security. Basically, as we explained, that obviously the business is going to get an amount that is less than the amount that is on the bill, and then when the bill is now due, the payer is supposed to pay the bank now. So the bank is going to gain in terms of the difference that is there between the money that they paid the business, and then and the money that the payer is going to pay them. Basically, so you see that the basis of bill discounting is that the business is in urgently need of money. They need money urgently. So that's why they approach these financial institutions or banks so that they advance the money on the invoices. So in other words, they are sort of selling their invoices to those financial institutions or banks. So this is what we have to what do we mean by bill discounting? So we got the second part of the question, which really describe the advantages of automated teller machines, which are the ATMs, and also we have got our 5 marks. Basically, you know that ATMs uh, they enable you to withdraw your money anywhere that you want, wherever you are. We'll see that the use of automated teller machines or ATMs facilitates convenience, and also it is a faster way of collecting money rather than maybe visiting at the bank and joining queue so that you can be saved by a bank teller. So those are some of the advantages that we can deduce from the use of ATMs. So we've got points that we have there that are pointing out benefits or advantages of using these ATMs. The first one that we have is that it offers self-service to bankers. It offers self-service to bankers. And then second one, it is fast and safe, as we're trying to explain. It is safe because you don't need to maybe to enter the building so that you can collect the money. And we can also see that on the third point, it says that there's less paperwork that is involved. You can just imagine entering a bank, obviously, you're going to maybe to fill in terms of withdrawal slips, or if you want to deposit slips. So the paperwork that is involved is also much time consuming as compared to just using an ATM, which means you are going to be saved maybe outside the bank, anywhere that you can be saved. So that's what we have in terms of the third point, which is less paperwork in terms of the use of ATMs. Then the fourth point is that it saves on labor and saves space. So the fourth point that we have, you see that it's an advantage from the point of view of the bank that they are going to save on labor. You can just imagine people who are going to be saved by the ATMs. They're going to withdraw ATMs. It's going to save many people which were supposed to come inside the bank, inside the building, and be saved by a worker. So in other words, we are saying this ATM is replacing labor. So it's going to save in terms of salaries and wages. Less people are going to be employed in that station. So this is what we have. And also space inside the building is also going to be reduced. There will be no congestion inside. Since people just arrive outside the bank, they collect their money, they go. So this is what we have in the fourth point. And then we go to the fifth point. It raises government revenue. We know that government revenue comes mainly from the source of the use of one of the fiscal policy instruments, that is taxation. Obviously, the use of those ATMs, we are going to be charged a certain amount for the service, and obviously, the money that the bank is going to receive from charging you for the use of that ATM is also going to be charged a tax by the government. So it means if more people use ATMs, it also means that the government is also going to collect more revenue from those banks because every income that is within the economy is also going to be charged a tax. So this is what we have. So revenue collection is also enhanced. So raises government revenue. So this is also a last bit that we have in terms of advantages that we can deduce from the use of ATMs, that is automated teller machines. So on the last part of the question is saying, describe the function of the Reserve Bank of Zimbabwe. So basically, we have to understand that the Reserve Bank of Zimbabwe is the central bank of the local economy of Zimbabwe. So basically, the question is asking you the functions of the central bank, because the Reserve Bank of Zimbabwe is a central bank. So our question is for 10 marks. So we've got various functions that are listed there in terms of the functions of the Reserve Bank of Zimbabwe, but basically those functions are explaining functions of a central bank. But what we know basically is the Reserve Bank of Zimbabwe is the central bank of the country, is the banker to all banks. It controls all activities that are happening in other banks. So what you are trying to say is every bank that is in Zimbabwe, be it a commercial bank, be it a merchant bank, has got an account at the Reserve Bank of Zimbabwe, that is the central bank. So the Reserve Bank of Zimbabwe becomes a banker to all banks. In other words, we are just saying all other banks have got an account at the Reserve Bank of Zimbabwe. So within that context now, we can see some of the functions coming out. So the first one is saying offers banking services to commercial banks, for example, operating current accounts for commercial banks. So this is exactly what I was explaining, that it is a banker to all banks. It offers banking service at commercial banks. So this becomes one of the functions. And then you go to the second one, acts as a clearinghouse. So maybe you'd want to understand what we mean by a clearinghouse. So you see that a clearinghouse is a financial institution formed to facilitate the exchange of payments. So that's what we mean by clearing now. So that's the function that is also being served by the Reserve Bank of Zimbabwe and the Central Bank. So we go to the next one. Central interbank indebtedness. So indebtedness on its own means, if you look at the term indebtedness, it means a condition of owing money. So in other ways now, we are saying when it settles interbank indebtedness is that when there is conditions of maybe banks owing each other, the central bank can come in as an intermediator in terms of settling those uh, debts that are there between those financial institutions. So this is what we have in terms of this point. And then we go to the next point. It is the lender of last resort. So being a lender of last resort, we are saying all other banks they resort to approach the central bank when they are in need of money. So we are saying the bank, all the other banks, they turn to the central bank when they urgently need money after exhausting all other options. When the banks are looking for money, the other banks are looking for money, for example, commercial banks, they need money. They have approached all other options that they think where they can get money and they can't get it. The final place that they can get assistance is going to the central bank because the central bank is responsible for all the functioning of all other banks. So that's why we are having now the issue of it coming in as the lender of last resort. So the other banks, when they are urgently in need of money, they can approach all other avenues. But when they cannot get money there, they can finally be assisted by the central bank. So this is what we have in terms of this point. Then we go to the next one, controls the lending rate. So basically, we have got a new term that is coming there, which is lending rate. So the lending rate would see that this is the rate that the bank charges when they lend money. The rate that the bank charges when they lend money is the lending rate. So that rate that is charged by banks is controlled by the central bank, which is the Reserve Bank of Zimbabwe in Zimbabwe. So this is what we have. So in other words, we are saying it sets the level of the lending rate. So basically, lending rate also, basically, if you try to briefly explain it, it becomes the cost of borrowing money. So this is what we have. So this is the point that we have. Then on the next point is that it is the banker and advisor to the government. So being a banker to the government, we are saying the government has got an account in the Reserve Bank of Zimbabwe, basically like that. So this is what we have. And then we go to the next point is saying acts as an agent for the state to borrow funds from the public. So acting as an agent, we are saying the state maybe in a way wants to borrow money from the public. So it goes through the central bank, which is the Reserve Bank of Zimbabwe. So this is what we have for this point. Then we go to the next one, issues and controls the supply of money, in brackets, notes and coins. We know that the central bank in the form of our Reserve Bank of Zimbabwe is the one that is responsible for the printing of money. And obviously, when we're talking about the printing of money, we're talking about the issue of notes and coins representing the money. So the central bank controls that aspect of money supply that is on the part of notes and coins. It can increase the supply of money through printing more notes and coins, or it can reduce the supply of money by not printing those notes and coins. So this is what we have. And on the next point, we have issues and replaces worn out notes and coins. So that's another function of the bank. We have got worn out notes and coins. Another ways we are saying these are notes and coins that are old, maybe beyond being used. So it is its duty to make sure that they replace those notes and coins. So we go to the next one. Keeps state department accounts. So we're saying all state departments. We are talking about maybe the Ministry of Finance is a state department. The Ministry of Health is a state department. So we are saying they all have accounts at the Reserve Bank of Zimbabwe. So we go there. We go to the last point, which is saying keeps a country's gold reserves. So this becomes the last point that we have. So obviously, our question there he has got 10 marks. So very important for us to take note. So if we add there, we see that the last part has got 10 marks. And if you go up there, we see that the other one has got 5 marks here. And the first one has got 5 marks. So if we add 10 plus 5 plus 5, we see that our question in total has got 25 marks. So this is what we have, guys, according to the essay question that we've looked at. This is a typical examination question. Let's revise the question. Let's stay tuned for more videos that are going to be uploaded of typical examination questions that we might expect at the end of our year as we write our final exam. But let's not forget to subscribe and share. Let's not forget to share the link to our colleagues who are doing Zimsec O-level courses. As for this video, I'm signing out. Let's meet again in the next video.